What does the future of housing look like to you, particularly in terms of closing the racial wealth gap and ensuring equitable access to
No.
sustainable home ownership?
What we need in order to close the racial wealth gap and is obviously a multifaceted strategy that to some extent emphasizes home ownership as a path forward, but I think that needs to be tailored to the individual market. Perhaps starting with the North Star of closing the racial wealth gap and then seeing in which markets access to sustainable home ownership might be an appropriate uh, intervention or strategy to pursue. I don't think it's going to be appropriate in all markets. I would point to um, some of the academic and actually policy research done by Dr. Andre Perry from the Brookings Institution that highlights that in particular properties in predominantly African American communities appreciate at a much slower rate than those in predominantly white communities in the US. I would also highlight that and not to oversimplify the American, racial dynamics to a purely black-white paradigm, but this is just one lens of looking at things through which to look at things. Um, Equitable access to sustainable housing is more than just a one generation challenge. It's a multi generation challenge in that families that got on the housing ladder in previous generations, post World War II, et cetera, have already had an opportunity to accumulate wealth that they can then use for intergenerational transfers of wealth, be it in the form of supporting a child's purchase of their first home, covering the cost of college, and therefore not having their children or grandchildren graduate with a fair amount of debt that prevents them from being able to afford a home. So thinking about it beyond just price, but thinking of the housing, but thinking of it in terms of other ways of closing that gap. One thing comes to mind in particular that I'm excited about. There's a new financial product, and this goes to sort of your third question. There's a new financial product that I've become familiar with recently, being offered by a company called Homium, Homium. And this is a zero interest shared appreciation note, sort of the equivalent of the rich uncle who provides, their cherished relative with down payment assistance of up to 30% of the cost of a home at zero interest and is only repaid a similar percentage of the value of the home or the same percentage of the value of the home when it's sold. So if you're buying, $500,000 home, you get basically a zero interest, non-amortizing $150,000 second that you don't pay back until you've sold the home years down the line. And these shared appreciation notes can then be bundled and sold to institutional investors who are seeking a bet on a particular housing market. So that allows them to participate in the upside of the housing market, and was kind of a unique exposure. And so that sort of product is something that could be a part of this home ownership solution. Also potentially thinking in terms of longer duration mortgages beyond the 30-year. There was a point in time before federal housing policy in the US came to developed that the maximum mortgage one could get on purchasing a home was a 10-year loan, and it was only for 50% of the value of the home. Then policymakers decided that a 30-year mortgage would be advantageous to the housing market, the broader political economy, the nation, et cetera. And, are there opportunities to extend that term, thereby reducing the annual cost of carrying a mortgage? I'm and this is perhaps fanciful, but reminded of sort of Methuselah bonds, which have very long durations, and perhaps these are uh, mortgages that could be assumed either across owners or across generations. So those are just a few ideas of how to sort of think outside of the box and potentially do so unconventional matchmaking between the needs of this particular market segment and the appetites of large institutional investors. I would be remiss if I didn't say that deployment into markets at the ground level can always be challenging, particularly if you're trying to address the racial wealth gap. You have to basically find lenders that are trusted by or in the communities composed of people of color, people on a different end of the wealth spectrum than perhaps the senior executives or investor class. And so I should absolutely highlight, my day job, which is working to support minority depository institutions. These are minority-owned banks across the U.S. There are 150 of them with aggregate assets of $350 billion. This is a market segment that most international investors are not aware exists. So just as there is potentially a blind spot with affordable housing, this is another area of potential, where there's not as much familiarity or awareness, if you will, of this opportunity to engage with these markets through these intermediaries that are FDIC insured, chartered banks, very highly regulated, etc. So I think there's an opportunity both for new product innovation, but also new channels of connecting financial markets with the communities where affordable housing is needed to close the racial wealth gap.
Because of your work helping founders and small businesses through your career, strengthening financial literacy in underserved communities, how can we apply some of the aspects that you mentioned in your previous response and principles to empower underserved communities navigating housing affordability and credit barriers? You mentioned that there are a couple of resources out there. I do need to check out this Homium. I've never heard of it before, but I'd love to know your thoughts on this particular question.
And this is not directed at you, but I find the term financial literacy somewhat problematic because there are many embedded judgments and sort of perceptions in that. I think it's important. We mentioned credit barriers. I mean, overcoming debt service coverage ratios or LTV through the things like shared appreciation notes and longer term amortization are all ways of helping reduce some of those barriers. But I think it's also important to think about wealth preservation as an approach to financial literacy. I mean, those of us who have access to fancy attorneys might understand the benefits of putting a house in a trust as opposed to owning it as an individual. Things like that, things that are just standard practice that are obvious to some people who have the benefit of inherited or hired knowledge in this space of a certain level of sophistication. It may not occur to people that, oh wait, these people are owning their homes outright, like or they're owning them as individuals rather than through a trust. That's not optimal, but it's not the sort of advice that is often given to people at this particular strata. And I'm sure there are lots of other best practices that are second nature to more affluent or perhaps potentially better educated homeowners or homeowners who have access to a higher caliber of financial advice. And so I would love to see many of those lessons brought over to this segment of the market.
Thank you again, Chris. You are a star, and thank you for your work and patience at a very tumultuous time in our history.
Well, thank you, Karen. This has been a refreshing conversation. Thank you very much, and I wish you well.